The latest World Gold Council figures point to a global recovery when it comes to consumer demand for gold. So if you look at jewellery, for example, that's up by about 60% year on year. And retail bar and coin demand for gold, that's up by about 56% year on year. But let's not forget, Q2 last year was a very unique year. We were at the height of the pandemic, which obviously had a significant impact on consumer demand for gold. But those figures, the recovery that we're starting to see, is apparent here in ASEAN too, which is one of the largest markets for gold in the world. If you look at two markets in particular, Thailand and Vietnam, when it comes to jewellery demand in Thailand, that's up by about 159% year on year, and in Vietnam it's up by 120% year on year. Bar and coin demand, slightly different. In Thailand there's been no change, but in Vietnam we're up by 75% year on year. And Thailand's actually a very interesting market for us because there's a lot more price sensitivity in Thailand. So when the price is doing well, like it was last year, we saw consumers take advantage of that by banking profits and by selling their gold. But this year, when the prices started to pull back, it's made gold a bit more affordable. There's a longer term view about gold's performance in many people's minds, and that has led to consumers going back into gold. But what does the future look like? It's both a consumer asset and it's also an investment asset. And consumers and investors, they react very, very differently to the economic situation. So when it comes to consumer demand, we're likely to see a continuation of recovery as consumers become more confident, as the economies worldwide continue to recover. That's likely to be supportive of consumer demand. But when it comes to investment demand, the drivers are very different. The drivers are about economic uncertainty, for example. It's about inflation expectations and linked to that interest rate expectations. The forefront of many people's minds is the inflation story and what can be expected in terms of the inflation outlook and interest rates in the shorter term. And that's likely to be a big factor driving investment interest in gold. We've actually seen in the last quarter, we saw new inflows into gold ETFs, for example, but that wasn't enough to offset the weaknesses that we saw in investment demand at the beginning of this year. But that's partly because of last year, which was a record year for investment demand for gold, as we were at the height of economic uncertainty and the impact of COVID was at its strongest.